My exact plan to go from 2 to 8 billion. Here's the main reason people cannot scale their business. Every successful business knows how important it is, and those that don't will fail. So in order to pull all of this off, we're probably going to add somewhere between 900 and 1,000 employees. The truth is, it will only take to make this happen. So the first 2 billion, as they say, is the hardest. The fact is, I started with one 2-bedroom, 2-bath with 116 grand. If you guys watched that video, you know. The process to get our first 10,000 units was a painful process, largely. But we learned a lot. Now we have the backbone and the frame in our whole company and our organization to take it to the next level. I had no idea how I was going to scale to 10,000 units, and that's the truth. But what happens is, once you set a goal out there, you start to realize who you need, when, and for how long. So sometimes they can be consultants, sometimes they can be employees. But the truth is, you don't always know. You can't map it all out. You have to have a directional goal, obviously. But from moment to moment, year to year, you don't always know who you need and when. You just keep focusing on the goal, and then things emerge, like I need an accountant, I need an analyst, I need an acquisition person, I need more property management, I need asset management. Whatever it is, you start to realize that if you're managing the goal, then you start to see the need. So to go from 2 billion to 8 billion, you need a strategy, obviously, for the next 10 years. So for year one, if I bought 1,000 units, which is only 250 units every quarter, that's, let's say, $250,000, that's going to be about 250 million. So if I'm going to buy $250 million in 2024 worth of property for 1,000 units, let's say, I'm going to probably need around 100 million of equity. So that's very high level. But if I'm only going to add 4 properties to our existing company, it's probably not going to require any more people, ironically, because I already have the structure and the backbone set already. The truth is, it will only take money to make this happen. Once you start to acquire, once you start to buy, you start to get a cadence. And then you realize you want to take it to 25, 26, 27. Our strategy in 2025 is to buy 1,500 units. 2026 is to buy 2,000 units. And 2027 is to buy 2,500 units. And if I'm able to do all of those things and keep it 2,500 unit acquisitions through the 10-year period, then I'll have 22,000 units acquired in that period of time. If, for example, they're all $250,000 each, then that's about $5.5 billion in acquisitions, in addition to the 2 billion that we have currently. So that puts us really close to the 8 billion. So if you break it down, if we're going to acquire $5.5 billion worth of real estate, let's say in the next 10 years, we're going to need, let's say, 30%. So we're going to need about $1.6 to $1.7 billion. And I know that sounds like a lot, but over 10 years, it's 100 to 200 million a year. That's it. But again, you just need to break it down. It sounds like a lot at the end of 10 years, but if you just divide 1.8 billion into 10 years, you can see that you just need about 180 million a year. So how do you pull all that off? So obviously, the first thing that you got to do is you got to make sure that your debt and your equity are all secure. So debt is really easy to find. There's a lot of different brokers and companies out there that will lend you money. So the best thing you can do is find a few of them and get multiple bids on each project, because they're all trying to get your business. They have access to a lot of financial products around debt. So you might get different kinds of terms, for example. You might have different rates. You might have things like interest only, an interest only option versus a principal and interest, which means that for the first 3 or 5 or 7 years, you might just have an interest only payment. So there's all kinds of different things that you would want to do through these different brokers as they start bidding on the projects that you have. So then you take those term sheets and you put them in your financial model, and that's how you determine your cash on cash and your cash flow from month to month or year to year. The other thing that you're going to need, of course, is you need somebody to bring you deals. You need a deal funnel. So with that, you're going to have boots on the ground. You're going to have broker relationships, and you're going to have acquisition people in charge of certain areas. For example, we might have somebody in charge of the Southeast. That would be North Carolina, Florida, or maybe even Georgia, for example. And then we might have somebody dedicated to Texas, just one acquisition person for that state. And then, of course, in Arizona, we don't really need anybody else. But to pull this off, we might only need 2 more acquisition folks. To hire acquisition people, you might have to pay a little bit of salary, or you might be able to go full commission, depending on how their pay is structured and who they are. To support them, you're going to need a couple analysts that can just process deals, look at the stuff that the brokers are sending them, and packaging them so that they can actually see the real numbers. Does it cash flow? Does it not cash flow? And those analysts can also be in charge of getting all the information from the individual lenders to be able to put in the financial model. And all this rolls up into my weekly investment committee meeting. And that's about 90 minutes a week that we do every single Tuesday. So this is just a matter of tweaking the current systems that we already have. Let's don't forget, I already have acquisitions. I already have analysts. We already have asset management. We already have property management. It all exists. And then as I start to buy properties, there are other stresses around the company, like in accounting, for example, or in property management, for example. So on the average, one accountant can handle 6 to 8 properties, and that should be about, let's say, 1,200 to 1,500 units, let's say. Same thing with the property manager. So what I like to do is I like to pair up an accountant with a property manager so that they know exactly what's going on those particular assets. So our goal, for example, in 2025 is to buy 6 assets at 250 units each. So all 6 of those assets would require most likely 1 more accountant and 1 more property manager. So we just plug them into the existing system that we have already. So that should be relatively easy. So we don't have to create a new system. All we have to do is continue to look at the one we have and build upon it. We just have to plug in more people into the exact same system. One of the things we should be looking at, and we will be looking at, how do we bring in more efficiency? Things like AI and marketing that can be programmatic and repetitious so that they can drive revenue and drive deal flow even better. So right now we have about 300 employees. Most of those are in the field. Most of those are managing properties at the properties themselves. So as many of you know, we do all of our property management in-house. We do all of our asset management in-house, all of our construction and development in-house. So we are a vertically integrated company. So in order to pull all of this off, just the acquisitions to be able to buy another 22,000 units, let's say, in the next 10 years, we're probably going to add somewhere between 900 and 1,000 employees. Now, most of those employees are going to be on site. Most of those employees are going to be the people that are actually the closest to generating the cash flow for the investor. The corporate office is in place to support the people that are working at the properties. That's what the corporate office is for. In the corporate office, we're not going to have a significant amount of stress because we already have a CFO, a COO, a controller, and everything in place. Now we just have to hire folks who can manage those properties and do the accounting on those properties, and they can fit in very nicely under the current system we have and under the current people that we have. So one of the big issues with scaling, of course, is being able to maintain the same quality. Here's the main reason people cannot scale their business. So the key around that, of course, is who you hire. What I typically try to do is I hire on attitude and not necessarily always on experience. So you have to hire the people that are going to fit in your culture. Every successful business knows how important culture is. And those that don't will fail. So one of the things that can happen when you add, let's say, 900 or 1,000 people is it can be harder and harder to maintain the culture of the company. And that, of course, is going to come with its own challenges. So you have to have somebody in charge of company culture at that point. You have to have somebody that's just focused on bringing everyone together at all times. And there are lots of different things to maintain the culture. First of all, you have to have a vision on what that culture is. But secondly, not everyone is going to resonate with it. There are different things that different people are looking for when they come to work for a company like us. So one of the things that we're known for is philanthropy, as an example. So we're well into the millions on our annual giving for our charity, for example. Many employees, mostly that are later in their careers, are looking for a company that is actually socially responsible like that. Not everyone's like that, however. Some people are very financially motivated, and that's fine. So there'll be plenty of room for those folks as well, but sometimes it's hard to bring those people in on the culture side as well. So you got to have somebody dedicated to culture in the company. At some point when we're larger, I would anticipate us having one person in charge of culture for our company. So growing a business is not just getting a client, getting some money, and hiring people. The visionary, which would be you, has to actually set the direction. You have to have a strategic plan to keep all the pieces together. The culture is actually the glue inside of all of it. And that's what attracts people, and that's actually what keeps people at the company for a long period of time and keeps everybody marching the same direction. So building a corporate culture is intentional and something that you actually have to focus on. As an example, each and every quarter, Ross and I do a State of the Union for the company. And all the employees weigh in, and they're able to ask questions to be able to find out exactly where the company's going. Is it growing, or is it expanding, or is it contracting? And that's our job to communicate that, because at the end of the day, what do people want? They want security, they want safety, and they want opportunities for growth. Generally, that's what they want. So it's the leadership's job to be able to portray that out to the whole company unilaterally so everybody can watch, but also they can ask plenty of questions. Most importantly, they know that we have a plan to grow each and every year, at least for the next 10 years. The biggest challenge from growing 2 to 8 billion over the next 10 years is by far going to be the people. So one of the hardest things to do is finding the right people. And the best thing you can do is just find the right people and put them on the bus, and then later figure out what seat they're going to be in. Because as you grow and scale, great people are rarely on the market. Most great people are working somewhere. So the right way to grow is to go out and find the very best people you can, recruit them, and bring them onto the team. Because all the players on the team will know if somebody's not pulling their weight or if they're not pulling their weight. Hiring the best people in the next 10 years is actually going to be the most critically important thing, way beyond the number of units or the debt and the equity. Because Ross and I can fly to New York and put all that stuff together pretty quickly. We can hire acquisition folks and we can buy stuff pretty quickly. And of course, with our track record, we're going to be in most best and finals, and we're going to be making plenty of offers already. So scaling that part of the business is actually not going to be that difficult. The actual difficulty is going to be finding the right people to put on the bus, and then eventually recognizing what seat do we want them in for the long haul. So most people are going to say, oh my God, those are huge numbers. I'm going to never achieve that. Well, you're wrong. I need you to understand and flip the script and understand that the folks in Wall Street, the folks sitting there with all that managed money, it's not their money. It's your money. They're the ones with the problem. They're looking for folks out there everywhere. They're looking for ways to put that money out all over the country, because unless that money's being managed and unless it's actually being placed, it doesn't make money. So money needs to have some velocity. It needs to be in action to be able to make money for someone else. So when you fly to New York or you fly to Wall Street, well, for some of you, that might be really intimidating. You just need to understand that they're the ones that have the problem. You're the solution for them, not the other way around. This money is readily available. It's managed. It's your money. It's your money. It's sitting in your pension. It's sitting in your pension. It's sitting in your insurance policy. It's sitting in your bank. When a bank has your money as a deposit, it's an expense and a liability to the bank. The bank has to lend it out to cover their own expense. So once you start to realize and flip the script on that, if you bring a good deal, a good team, and a good business plan to New York or to Wall Street, you will get funded. They will be part of your vision. They will help fund your business plan. All you have to do is change your mindset a little bit, be a little bit creative, and of course, move forward with a little bit of calculated risk. So if you guys enjoy this and you feel like you got some value in this video, I would just appreciate it very much if you just share this video with somebody that you thought of. And of course, if you want to see how I bought $3 billion in assets and we own $2 billion today, you can check out that video.